Hey guys, it's MH Finn. Today we're going over a stock that has received a lot of attention in the media and online, New Age Beverages. In their own 10K filing, they classify themselves as, quote, a healthy beverages and lifestyles company engaged in the development of a portfolio of organic, natural, and other better for you healthy beverages. As you can imagine, millennials are already drooling all over this product. Their marketing director has hit the nail with the hammer with this one. Their product line and marketing strategy is just plain amazing. Just look at the packaging, look at the descriptions, and everything about their products. Everything is specifically and intentionally geared and directed at 20-something Lulu wearing Starbucks drinking white women. Cold brew coffee, tea, and yerba. I don't even know what that is, but it's got the word organic, natural, and healthy, and in today's world, that goes a long way. Hipster is a word that comes to mind, and there is no better showcase of this truth than when you go to their website for yourself, where you will see this guy. He checks off every stereotype regarding the male customers of this product. Beanie, check. Beard, check. Flannel, check. Hiking, check. And last but not least, rolled up jeans. 100% check. The stock's performance has made it a serious topic of conversation since August, when a deal with Walmart was announced. Going from nearly $1, the security jumped up to nearly $9. This kind of performance and low price made it especially popular on Robinhood. Currently, NBE is owned by over 55,000 users, making it one of the most popular small cap companies in the world. For companies with market caps under 500 million, NBE is the most traded stock on the app. But is it a good investment? Let's start with some basics, going over its last earnings report. We can start with the obvious. The company is losing money. In 2018, their operating losses amounted to $20 million. And if that isn't enough to put you off, their profit margins are declining. In 2017, New Age was able to achieve 24% gross profit based on net sales. For 2018, that amount fell to 18%, with the company blaming, quote, working capital limitations on production and shipping, and charges from major distributors resulting from inventory shortfalls. Ultimately, no indication is given that this number would improve in years to come, and we know what kind of reputation Walmart has with its suppliers as far as price and margins go. The outlook is not good, compounded by the fact that sales and revenue have shown little improvement from years past. 2017 revenue totaled $56.6 million, while 2018 produced $59.1 million, just a 4% improvement year over year. For a company that's losing money, revenue growth could be their only savior, and 4% just does not cut it long term. Although these facts may sway long-term investors away from the stock, in just the last month, investors in New Age have experienced an 8% return. Besides its financial health, there is something else concerning about this company, something I found reading over the company's 10K filing with the SEC. Buried deep in this document is a section labeled Direct to Customer Distribution, and it reads like a scene from a famous Office video. It is in this section where the company describes the process and organization behind their independent seller platform. For individuals wishing to sell in a person-to-person model, the IPC program is meant to give those individuals an opportunity to profit. The process starts with new IPCs sponsoring existing IPCs, with the new IPCs becoming members of the sponsoring IPC's sales organization/umbrella. IPCs are required to purchase a starter kit, which includes sales and educational materials. After paying the $35 start kit, IPCs are not required to invest any other sum of money to start. After enrolling, you become eligible to purchase products for resale through New Age's wholesale website. You are then encouraged to build sales organizations by recruiting and enrolling new IPCs. As new IPCs sponsor new IPCs, levels are created in the IPC organizational structure called a downline. As these new IPCs continue to sponsor, they create their own sales organizations, which also form a part of the sales organization of the original sponsoring IPC. Now you're starting to see the picture, and it's pretty clear. Throw in as many fancy terms as you need. Let's just call it what it is: a pyramid scheme. The IPCs are not paid a salary or a wage, but instead rely on commissions or sales in order to make money. But the fine line between multi-level marketing and pyramid scheme begins to blend when we look at the statistics. In a 2018 poll with over 1,000 multi-level marketing participants, researchers found that over 70% made less than 30 cents an hour for their efforts, and nearly 20% of those never even made a sale. Even worse, nearly 33% acquired credit card debt financing their operations. Statistics like these go to prove that this form of direct selling is usually a recipe for disaster. Building a brand while screwing people over is incredibly difficult, and the damages that occur in the process are hard to recover or grow from. This is why I'll be staying away from New Age Beverages regardless of its performance. This doesn't necessarily mean that the company will fail. We've seen this sort of marketing strategy become incredibly successful in the past. In one of the most famous examples, Herbalife, a company structured loosely around the same sort of multi-level marketing and direct selling model, has achieved incredible success. Their stock price grew nearly 100% in the past 5 years. In one of the most infamous short plays in history, famous hedge fund manager Bill Ackman bet nearly $1 billion that the company would fall to zero back in 2012, accusing the company of running a pyramid scheme. He held on to this play for years, finally giving up in February 2018 after hundreds of millions in losses after Herbalife stock continued to run up. This situation goes to prove that just because a company is running on shady practices doesn't mean a short play is guaranteed. Whatever you may think about this company, make sure you drop a comment below. If you're an investor who owns it, let me know how you feel and where you think the stock is headed in the next year. Thank you guys for watching. If you enjoyed my video, please don't forget to subscribe and like. If you want to support my videos and earn a free stock in the process, don't forget to use my affiliate link for Robinhood below. You will have a 1 in 150 chance of earning over $100 just for signing up.